Good morning and good evening, everyone. Welcome to this year's Future of Payments report launch. Thank you for joining us. We are absolutely thrilled to be joined by such a global group of central banks, technology providers, commercial banks, asset managers, and fintechs. Welcome, everyone. In its fourth year, the Future of Payments has become a key companion to the dynamic and evolving payments landscape. This year, I'm very pleased to say that we've pushed the boundaries of our research. As well as surveying central banks' forays into digital currencies, we've also gathered new research on central bankers' attitudes to improving cross-border payments. As you'll find in our report, and as you'll hear in our presentation of findings, it's become increasingly clear, for example, that central banks have had enough with high transaction costs and are prioritizing cost reduction. Another telling finding is connecting CBDCs cross-border remains an important priority. However, more faith is placed in interlinking faster payment systems as being the panacea to solve the cross-border problem. We hope the report reveals further insights which can be used as a powerful tool to help drive and define public and private sector collaboration in the coming years, especially at a time when geopolitics may create further fragmentation and division. I'd like to firstly thank our esteemed report partner Ripple for their contribution and wider leadership across the industry, as well as our DMI members for always helping guide and shape our work. Finally, we also thank our central banks that participated in the survey and those that consulted us on the research. Without you, we would not be able to continue to create these findings for the public good. I'm very pleased now to hand over to Katrina Liu, research analyst at the Digital Monetary Institute, who will present the findings. We will then hand over to Lewis McLennan, DMI's editor, for the panel discussion. Over to you, Katrina, and thank you.
Thank you, and hello, everyone. And thank you for joining us for the launch of our annual Future of Payments report. I'm Katerina Liu, a research analyst at OMFIF, and I've been working on the survey portion of the Future Payments report for the past few months. It will be a pleasure for me to talk you all through the key findings today. To briefly introduce this year's edition, the report will explore central bank CBDC plans, cross-border CBDCs, regional payments, regulation, and stablecoins and cryptocurrencies. We also include our second annual survey in the 2023 report, where we've received responses from 35 central banks, 20 from emerging market economies, and 15 from developed markets under CBDC plans, third-party involvement, and their opinion on the challenges around cross-border payments. So among survey respondents, CBDCs overall continues to gain strong momentum. While only 7% have already launched a CBDC, as seen on the left end of the chart, and another 7% expect to issue one within the next couple of years next to that. 20% of central banks we surveyed expect to issue a CBDC within 3 to 5 years, and a further 20% may do so in the next 6 to 10 years. In other words, 41% of respondents, including those who have already deployed one, could have an operational CBDC by 2028. When contrasted to last year's survey, where we asked the same question, the share of respondents who expect to issue a CBDC in up to 5 years was 36%. And further down the line, 68% of this year's respondents would expect to deploy a CBDC within the next decade. While contrasting to last year's respondents, again demonstrating an increase in momentum, where 65% of respondents would have expected to issue a CBDC within the next 10 years. The chart here also shows at the end on the right that 17% of respondents presently do not expect to issue a CBDC, but among this group, most of them do not completely rule out CBDC issuance, where a number of the respondents are continuing to conduct feasibility studies. While momentum for CBDCs is growing, what does this say about their sentiment towards them? This year, 29% of respondents are now more inclined to issue a CBDC, shown by the light blue portion of the chart, while 61% maintain their stance on CBDCs, as shown in the dark blue portion. Along with the findings from the previous slide, where 68% of respondents expect to issue a CBDC within 10 years, these suggest that the feasibility studies and exploratory research that central bank respondents were undertaking are producing promising results and are continuing to encourage them towards CBDC deployment. While central banks continue to be encouraged by CBDC progress, their motivations for issuing a CBDC may vary, particularly along developed market and emerging market lines. In this chart is demonstrated as light blue representing central bank respondents from developed markets and the dark blue for respondents from emerging markets. The dark blue bar on the left side of the chart shows that almost 60% of central bank respondents from emerging markets very clearly see financial inclusion as their main motivation for pursuing a CBDC. On the other hand, for developed market central banks, 40% of respondents in the light blue bar see CBDCs as a means to preserve their monetary sovereignty. A further 30% of developed market respondents have selected other as their response, but elaborate that there is no clear, singular primary objective, but rather a combination of factors. As central banks continue with their CBDC research, their primary objectives may continue to form. There is also a divide between emerging market and developed market central bank survey respondents on their main concerns in deploying a CBDC. 68%, which is a majority of developed market central bank survey respondents, selected low adoption as their main concern. While for emerging markets, low adoption and cybersecurity tie as their major concern, both at 37% each. A further breakdown on the motivations and concerns can be found on the first chapter of the report. When it comes to designing CBDCs, our survey has found that 40% of respondents found offline payments to be the most challenging feature of CBDC design, as shown by the light blue bar. Overall, the majority of respondents, almost 70%, consider offline payments to be a challenge in designing CBDCs. Central banks may need to consider these other features listed on the x-axis of the chart, including offline payments, cybersecurity, privacy, etc., when designing their CBDCs. However, given the difficulties central banks are experiencing, it's unsurprising that offline payments has the highest share of central bank survey respondents, who intend to work with third parties for this aspect of CBDC design. This is indicated by the dark blue bars, where 37% of central bank respondents, while not presently working with third parties on offline payments, intend to do so in the future. Overall, roughly between 20% to 40% of respondents presently use third-party help for user experience, privacy, cybersecurity, and scalability. When accounting for the growth of the use of external providers, in other words, when counting both the respondents who are working with third parties and intending to work with third parties, the percentages of third-party involvement for these is roughly 60%. Central bank respondents are already working with a range of third parties. Technology companies, unsurprisingly, are the most common third-party partners for central banks, with commercial banks not far behind, where the share of central bank survey respondents for each is at around 80%. The more striking finding is that the role of payment service providers could sharply increase to where more than 80% of central bank respondents intend to work with them in the future, up from 45% of survey participants who are working with them now. Just as important as private sector partners, central banks will need to collaborate with each other in order to develop cross-border CBDCs. 31% of respondents view connecting CBDCs as the most promising avenue to improve cross-border payments. Cooperation for cross-border payments is underway. As we can see, among 21% of respondents are working on a multi-currency CBDC platform. Globally, there are about 16 such projects at various stages, ranging from proof of concept to testing. To see a more detailed breakdown of these projects, you're welcome to refer to Chapter 2 of the Future of Payments report. The findings, however, show that despite the promising movement towards connecting CBDCs to improve cross-border payments, this is only second to interlinking fast payment systems as the most promising avenue, where instead 47% of respondents selected this option instead of the 31% from just now. What these findings suggest that while connecting CBDCs is viewed as promising, because it requires international collaboration, central banks may also need a domestic rationale to implement a CBDC. Different cross-border CBDC projects allow for interoperability to varying extents. Our survey findings indicate that central banks prefer the compatibility model the most, where they ensure mutual compatibility, as shown with the bar on the left side at 47% of respondents. This model is the lowest cost option. the hub and spoke model is the next most supported model at 32%, while the single system or common platform model comes in at third, at just above 15%. Both of these models require more upfront investment, while the bilateral linkage model are limited because of the number of links required to develop a global network. However, as single system projects like Enbridge or hub and spoke projects like Icebreaker advance, we may see central banks' faith in these models grow. There are also multiple issues around cross-border payments that central banks may need to address. In terms of what they prioritize, 27% of survey respondents highlighted that transaction costs is an issue around cross-border payments that they are most focused on improving. This ties with processing times as an area they are most focused on improving, with another 20% of respondents. They've also highlighted interoperability and regulatory compliance as areas they're working to improve, and 19% and 16% of respondents respectively. This survey also reveals that 17% of respondents said that they're aiming to reduce the share of cross-border trade denominated in dollars, as shown by the light blue portion. Instead, an alternative to dollar-dominant trading is via inter-regional trade. The factors that may drive countries away from using the dollar include looking to mitigate geopolitical risk. You're also welcome to refer to the report for a further breakdown of the reasons that may discourage countries from using the dollar. And it is also important to note that the survey asked about reducing use of dollars. As we will hear in the panel later, there are a variety of other strategic objectives that countries or regions may have when developing regional payments instruments, and a broader range of the respondents are involved in those. There are also further examples of regional payment systems covered in more detail in the report, such as including PAPS, the Pan-African Payments and Settlement System. And finally, when it comes to cryptocurrencies and stablecoins, central banks are still generally skeptical of the value they can provide as a means of cross-border payments. Here in this chart, we see this bar on the far right side. Despite its existence for approximately 14 years, central banks are still unsure of its eventual value. In a separate survey question on what is the most promising avenue for improving cross-border payments, none of the respondents thought that stablecoins and cryptocurrencies would be the most promising means to improve cross-border payments. So in all, central banks are now more inclined to issue a CBDC than in previous years, where 41% of respondents could have an operational digital currency by 2028, in contrast to last year's survey, where the share of respondents who would expect to issue a CBDC in up to 5 years was 36%. Central banks would most likely involve third parties in CBDC design and deployment, most notably with payment service providers, which shows the biggest uptake from central bank survey respondents as future collaborators, where they would work together in particular areas of concern like offline payments, which a majority of respondents saw as the most challenging feature. Efforts to improve cross-border payments is also gaining momentum, such as with the 16 multi-CBDC platform programs in existence globally. But survey findings reveal that interlinking fast payment systems seems to be the most promising solution. Regardless of the ideal interoperability model or most promising avenue to improve cross-border payments, the areas of focus remain and would need to be addressed, most prominently on transaction costs and processing times. Other attempts at using digital currency technology to bridge cross-border payment gaps continues to make varying levels of progress, such as regional integration efforts due to varying motivations, such as an alternative to dollar-dominant trading, or blockchain or DLT, which central banks still remain uncertain about, even after a decade of its existence. And with that, thank you for listening. I encourage everyone to download and read the report using the QR code provided here or with the links provided to this event. Thank you again for listening, and I'll hand you back to begin the panel discussion.
McClellan. I'm the editor of the Digital Monetary Institute here at ONFIF. I hope you found the key findings presentation interesting. There's a lot more detail and analysis in the report, of course, so please take a look at that when you have a chance. One of the things that stuck out to me, for example, from that was I think it's very interesting when you see that low adoption is such a significant concern for central banks looking at CBDC, but particularly in developed markets, but across the board really. But despite that, it's only a very small proportion of central banks that are intending to work with third-party advisors on marketing and promotion. My suspicion is that as we see these projects coming closer to fruition over the next few years, that proportion is going to climb. Possibly we're going to see that kind of uptick that we've seen in intending to work with, that we've seen in payment service providers this year. So yeah, a lot more to talk about there. But yeah, we're going to move into the panel discussion portion of our lunch today. And so for that, I'm delighted to welcome John Bosco Sababe, Deputy Chief Executive of the Pan-African Payment and Settlement System, Lucy Charles Shady, an expert in payment systems at the Bank of Tanzania, Parawat Kanathasan, Deputy Director, Payments and FinTech at the Bank of Thailand, and from Ripple, our partners on this report, Anthony Ralphs, Director of Product Management for CBDCs. Thank you all for joining me today. Great to have you. So let's just dive right in. I wanted to get started on the topic of CBDCs and just straight away on cross-border payments. As we saw in the key findings there, interlinking CBDCs is regarded as a very promising route for improving cross-border payments. It's behind interlinking fast payment systems, but it's something that central banks are overall pretty positive as. But when you ask central banks what their primary motivation is for developing CBDCs, they don't say cross-border payments at all. That was a very small proportion, and there is kind of an apparent contradiction there. I wonder if we could get your thoughts on that. Maybe Anthony, if you'd like to kick us off there. You're on mute. Sorry.
Try again. Okay, so I think from a perspective, if I'm putting a system in, I'm looking at it first and foremost from a domestic context. So all of the central banks we engage with have a wish list of problems to solve or opportunities to identify within their domestic economies. Cross-border is always part of that, because what they don't want to do is be an island. They want to be able to be interconnected. So as part of that wish list, they want to sort of select a solution that allows connectivity to multiple parties. And actually, it could be anybody. So we always kind of approach it from, we don't actually care what's on the other side of the connection. What we need to have is compatibility. And I think that came out in the report as well. So if I look at it really simplistically, if we try and boil the ocean in one project, it's going to be very difficult. So we pick the low-hanging fruit, we pick the priorities first, but with a view to actually extensibility longer term. I think cross-border payments, as we know, is a big challenge. The CPMI and the FSB have been doing a lot of work on this with the G20. So it's trying to dovetail these two initiatives together, ideally, should be how we approach this problem.
Yeah, it is an interesting challenge, I think, trying to, as you say, you kind of have to approach it sort of chronologically, but I suppose you do need that cross-border compatibility baked in from the start as well. And I think that's a challenge that a few central banks have been struggling with. Certainly, it's behind offline payments. It's one of the biggest challenges, and something that they're certainly looking for a lot of third-party assistance with. John, Lucy, Parawat, anything to add on that? I guess the approach that central banks are taking to cross-border.
Thank you very much. I think I'll begin by central banks. I think your analysis is very correct, because central banks will be looking at something that's practical and serving their economies. So if you look at cross-border payments, is the biggest challenge for them either is a digital currency or not, or fiat money. I think the issues that are affecting cross-border payments are quite different from having a CBDC. Whether today we run fiat money, and central banks are thinking of replacing that or part of it with digital currencies, which is a very good move. It's bring everyone to financial inclusion bracket. But then in terms of cross-border payments, are there the issues? Because to date, we know that the issues in cross-border payments are about four, or the challenges. We have access, we have speed, we have transparency, and cost. So is a CBDC necessarily answering those questions, those four challenges? I think that central banks are looking at more of solving problems that are there rather than bring something that's going to help their monetary base, their currency in circulation, for instance. That's quite different. So systems that are going to come in place to be able to solve those four challenges are kind of the system that the central banks would adopt to be able to solve the cross-border payments. I mean, we look at I'll take an example of the regional payments and the continental platforms that we have. For instance, the Pan-African Payment and Settlement System. So what we do, we look at these challenges that have been identified by the G20. That's cost, access, speed, and transparency. And then those, once we answer those, then central banks will certainly be attracted to us and to the others. And that's what we aim to do. So I don't think it's a contradiction what the central banks are looking at. It's rather different objectives. The objectives of cross-border payments or the issues there are not solved by a CBDC. CBDCs have come to solve different issues.
Yeah.
So I believe that this is what is going to drive the adoption of CBDCs for cross-border payments. If CBDCs can answer those three challenges. Now, maybe I can touch also on in terms of the uptake. I think the uptake is quite normal that once anything is beginning, I can maybe relate to 19th century when fiat monies were being introduced, notes and coins, and a shift from commodities, gold standards, and all that. So this is kind of an education that's supposed to be done. So this, I think, is what's bringing the uptake quite slower. So I will touch on financial inclusion much later.
Yes, yeah, we'll come to that in a moment. Lucy,
Thank you very much.
Thank you. Lucy, were you going to add anything there, or should we talk about the domestic objectives a little bit?
Yeah, maybe I can chip in there. For sure, from the central bank, we do acknowledge the potential of CBDC, especially on the cross-border, on the side of increasing security, speed, reducing of costs, and reducing the foreign exchange conversion challenges, reduction in dependence on intermediaries. So there's a potential there on the cross-border. And much onto that, there's a number of pilot projects conducted on the cross-border, on the pilot test for cross-border for CBDC. That include the projects like Project Dunbar, Enbridge, Mariana, Icebreaker, and the results were promising. So, but the central banks tend to look inside out. What I mean by that, we need a well-founded regulatory framework, supervisory, oversight structure domestically, and then you align in the close cooperation with the partner on the cross-border on the other side. So I think the potential is still there. It's just we need to make sure that the infrastructure, the environment are ready to for CBDC as a payment instrument for cross-border. Thank you.
Yeah, thank you. I think that you touched on a theme there that came up quite a lot when we were constructing the report, which is that there are problems with cross-border payments, but some of them are amenable to technical solutions. You know, you can build a new settlement system and so forth, but not all of them. Some of them are regulatory. Some of them are just kind of inherent in the design of the current system, and it's not always something that you can solve with a new technological system. Parwa, I think you've got some experience on addressing kind of both of those challenges.
Yeah, thank you very much. Well, I agree with others that our job is to find ways to address the pain points faced by people, by migrant workers, by tourists, by businesses in dealing with cross-border payments. And CBDCs is one way to do it. So for us, another way is to link up fast payment systems. And we have done quite a number. So there's one Prompt Pay Now, which is the fund transfer, and we have also 7 QR payments for tourists. But it works in the same way. And as you said, there are quite a number of challenges when you link up these payment systems. Business, technical, and legal, regulatory, of course. Business, you have to divide up the cake, ensure pricing is sustainable for business, but also cheap enough for people to use. Legal, regulatory, all the screening, AML, CFT, all the sorts that have to be included into the system. When we did the systems, we have not actually changed any law. Of course, it would take quite a lot of time, but everything is built into the system to accommodate the different laws and regulations that each country has. And then technical, if one country has a higher technical standard and one country has a lower, then of course we would go for the higher. This would be understandable. So yeah, so many challenges, but we think we've been doing quite okay.
Mm.
Lewis, if I can perhaps just come in, because I think when I look at cross-border payments, there's a broad brushstroke of it encompasses every type of payment. I think a lot of the report and a lot of the sort of pain points focus on remittance payments and individuals, where I think a lot of the central banks, from my observation, the conversations we've had, typically around wholesale and trade finance and the big volume and value payments that actually have a different kind of cost structure, different risk profile. And I don't think there's a one size fits all. I know a lot of the banks are looking at, well, if we can settle in central bank money, that potentially de-risks and brings de-risking into maybe lowers the cost because the risk profile is lower. So I think it's kind of a broad spectrum, but ultimately we want to get to a frictionless experience where we can move value instantaneously, but within guardrails that are set out by regulation.
Yeah. On the moving towards that, Parrot mentioned that doing that at a global scale is very difficult for a lot of reasons. Obviously, there's huge numbers of participants, very disparate banking systems that you're trying to connect. One of the things that came up again and again when we were doing the research for this report is that there is an increasing number of regionally focused payment systems trying to create that kind of seamless experience of payments, but not trying to do that for the whole world, but trying to do that for a set of specific trading partners. And I think that's something that John, it'd be good to hear from you and Lucy on that in particular. I think what do you feel like are the for PAPS, can you talk us through maybe first some of the strategic objectives that you're hoping to achieve, and then we can maybe move on to what are the typical difficulties that you have to overcome?
Thank you very much. I think that's a very topical issue today. And maybe what I will do, I just take a few 1 minute or two to update where PAPS is and what PAPS is all about, and the rationale of creating PAPS and putting it in place. So PAPS today has got a membership of 86 commercial banks and 11 central banks from across Africa, and it's operating in some countries, in several countries. So it's more moved from a project to a system today. So today it's a payment system that's across Africa and operating based on local currencies, and the settlement happening on multilateral net basis. So that's the update so far. Now, what's the rationale of creating a Pan-African payment and settlement system? The rationale is as follows: is that if you look at trade around the globe, the world, if you look at intra-European trade, it's beyond 75%. That means countries in Europe are trading at the level of 70% plus. Intra-American, between Canada, between the US and the rest, is still high as well, it's beyond 50%. Intra-Asia as well. Now, we find that between African countries, we don't trade with each other. And there are so many hindrances to trade, certainly so many challenges and barriers to trade. You have physical transport, logistics, you have documentations, but payments come in as the soft infrastructure that is affecting the way we trade, and largely because the way we send money to each other. One, you recall that I talked about the 4 challenges: cost, speed, transparency, and access. So there's limited access to those systems. It's costly and it's not instant. So the rationale of setting up PAPs was, well, we've created the African Continental Free Trade Area, which is a very big preferential trade area, which is probably the biggest in the globe ever created, because these are 55 countries with about $3.5 trillion in terms of GDP, and also in terms of the population, it's about 1.3 billion people. So this is really huge. But how do we make it? How do we implement it? How do we make it work? The way to make it work is, let's create a payment system for that. So that's a rationale for creating PAPs. And the objective is that we have challenges in terms of convertible currencies that are left and right, but how do we now make sure that we use our own currencies to be able to trade? So, and how do we formalize the informal trade that's across the borders? Because we find so much informal trade across borders, between Benin and Nigeria, between Tanzania and Rwanda, between Burundi and Zambia. So all those kind of corners require that we have a payment system that comes in to answer the challenges that we mentioned above. So that's a background to it.
Yeah.
Now, how do we probably move? How are we moving on? Or probably what are the challenges? The challenges, what Privat has just mentioned about different regulatory frameworks, different levels of technological advancements, so different kind of things that come in along. So try to come to this and make sure that these run almost at the same speed, at the same level, is quite a challenge as well. So that's where I can mention where the pain point is, and that's where we are, and that's a rationale of forming these kind of payments. So the PAPS is a continental platform, which is meant to interoperate between regional systems in Africa, between the EAC, the East African Payment System, between the SADC RTS, between any other that's existing, so that we can interoperate all of them, not to come and cannibalize them or replace them, but to support them to have access to the whole of Africa.
Yeah.
So that's a objective of PAPS.
Thank you. Can I? It's a fascinating project, and I think it's been spoken of very highly from everyone we've asked about it. Lucy, can I come to you and get your perspective on? I believe you guys are involved in a number of different kind of regional payments initiatives, and it'd be good to hear from you, I guess, what you guys saw as the advantages. I imagine there's some overlap with what John was saying, but possibly some unique things for you as well.
Yes, indeed. Tanzania is one of the major economy that is participating in multiple regional payment systems. So we are participating in East Africa payment system. We are participating in SADC RTGS and TCIB for retail schemes as well. And now we are in a discussion with appropriate model for joining PAPS as well. So the strategic objective behind the regional platform is to facilitate trade, being exchange of goods and services between the countries. We also need to facilitate payment, implementing monetary policy, to foster harmonization, alignment, and integration within the region. And it has been a vehicle in a strong collaboration and integration within the member in that payment system block. And as well as we find a depository of knowledge sharing because of trying to harmonize a lot of regulations and policies around the operation of these regional blocks. But to be clear, cross-border systems are more complex compared to the domestic, much as ideally looks like it's an extension of the domestic platform in a bigger scale, but it's quite a complex. But I can still see there's a lot of potential in enhancing cross-border payments and make it more valuable to the members, where we see it's a good commitment to a shared vision for the participants. And we also see that it needs a lot of coordination and alignment, as well as the part of the regulatory, supervisory, and also on the oversight as well. And also it provides a room whereby you need to enhance your domestic payment infrastructure so as to support the cross-border payment system, especially when there's a interlinkage to the domestic system, and also provide improved standardization of, we are talking of data standards, as well as the quality of the data, so as to facilitate the straight-through processing. And the last thing, it now provides potential for integration with the new players in the market. That is more innovations on the platform, and non-bank service providers to be able to be part of the platform, and also another more innovative like cross-border payment through CBDC that we see something that also is being discussed. So I think there's still a lot of potential for the regional platforms. Thank you.
Yeah, absolutely. It's certainly been something that in Europe and Scandinavia that you can see a lot of challenges kind of agreeing those governance issues between themselves. So a lot of challenges, but I suppose, as you say, there's when you've got questions around formalizing unofficial trade, that kind of thing, then there's some big benefits to be realized there. We do have some questions coming in from the audience, so please keep those coming. I will come to those in a moment, but yeah, please do keep them coming, and we'll get to them. I wanted to, just before moving on from this area and sort of interlinking payment systems, as we saw in the survey, the interlinking CBDCs was an idea that central banks are quite supportive of, but interlinking faster payment systems had the lead on that in terms of their favorite approach. Parawat, can I come to you there? I know you've been involved in Project Nexus. Can you talk about we've heard from the BIS on this. It's quite a demanding technical lift that they talk about for that. Can you talk about some of the challenges and progress that's been achieved on that front?
Yes. Well, as I mentioned, we did this bilateral interlinking between Thailand and Singapore, and this has been the basis of Project Nexus, and it's a multilateral linkage. And why multilateral? Because if you have two countries, if you have one linkage, that's two countries. But if you have 20 countries, you would need 190 linkages, right? And each linkage, according to our experience, takes about 1.5 to 2 years, depending on each pair of countries, and huge amounts of resources, human and IT. So why not create a multilateral platform? And once you have this, you have a new country, plugging it in, you're linked with every country in the platform already. So this is the main idea of Nexus, and we are now working with 4 other countries in Southeast Asia, along with the BIS Innovation Hub in Singapore, to realize this. The proof of concept has already been achieved over a year ago, about a year ago, and now we are dealing with quite a number of taxing issues, not only technical but also governance. Bilateral is the beauty of bilateral is that you only need two countries and you agree, right? But with 5 countries, it's you have these headaches multiplied by 5, and we hope that we would achieve a kind of template and rule book that would fit everyone that's part of it, and then every newcomer as well. So within, I don't know, a year or 2 or 3 years, when this gets realized, people would be able to pay as conveniently as they would do domestically.
Yeah, that's certainly very promising. Anthony, can I come to you on a related topic? We've got a question here from Driss Chukri, who's a senior expert of financial market infrastructure at the Bank Al Maghrib in Morocco. And he is asking about advantages or disadvantages of that approach of interlinking faster payment systems versus interlinking wholesale CBDCs or other approaches. Can you talk a little bit about how different a CBDC based approach might be?
Sure, and I'll perhaps just give a bit of context as well. So about 7 or 8 years ago, when I joined Ripple, we were building out the cross-border payments network. We had exactly the same challenges. One of the things we did, we went and surveyed over 100 countries around the domestic infrastructures available in place, what data was required to process payments, and could you use those systems if you originated a payment overseas? So there's a number of things that led us to create our governance structure, the rule book that all members adhered to, and also a harmonized payment standard based on ISO 20022. So we were a little bit ahead of the curve on some of that. I think just going back to the point, though, it really ultimately depends on what use case and who the participants are and the risk model. So if we look at wholesale, typically that's done by a very small number of the institutions involved. It's typically the very big actors who have good liquidity, they have good credit ratings, and they're typically very aligned with central bank thinking. And when we start to go down to sort of smaller tier institutions that maybe are very regional, and this could even be within a country, they're very regional, the model starts to become very complex. And so you've got to sort of think about ultimately what are the rules of the road for receiving and processing payments in country. They do differ country by country in terms of the information that's required. You get into privacy considerations as well, like what might be permissible in one country is a complete no-no in another country in terms of the data that's passed. So there's a whole host of factors. It's kind of, you need a collective group think here with some of this stuff. And the danger is you end up trying to solve for every single nuance and every single problem. It's kind of, I think the CPMI and the FSB and G20 are doing the right thing by setting out a set of ground rules. It's really then applying the technology to it. And when I look at faster payment systems, great. Most of them, again, from my experience, typically work on some sort of deferred net settlement basis, where if we're talking about wholesale, you probably want real-time settlement because of the value. So these start to become super important as well when you think about the design. And I think this is where CBDC starts to provide an opportunity, because you can lower that, you can potentially make the technology more accessible, but reduce the settlement risk. And that in itself is a different constraint and a different set of operating opportunities that I think CBDCs and distributed ledger technology actually offers, and also the lower cost of participation in these models. So it's kind of democratizing a little bit the technology, but you can still apply the ground rules and the governance on top of that.
Yeah, I think that's an excellent point, and it leads us on to another conclusion from the survey, which I was quite surprised at actually, and that is that central banks are very unsure of the place of blockchain and DLT in the future of payments. So from memory, 66% of the central banks we surveyed said that they were unsure that the blockchain had a place in the future of payments. The remainder, a small, some said, has a place in cross-border payments, some in domestic central bank operated payments, some in domestically operated private payments, and a small proportion said no, they don't think so. So it's still overwhelmingly unsure is the answer. And perhaps that's not surprising, but I think in the context of a world where you're seeing companies like PayPal really doubling down on blockchain, Swift as well, in the private sector, it does seem like a lot of these arguments feel relatively settled. Commercial banks are certainly pursuing it fairly aggressively in some cases. I'd be interested to get the perspective of the panel on what you guys feel like the benefits are. Anthony, I'll come to you on that in a moment, but Lucy, I saw you were nodding when that Anthony was talking about reducing settlement risk, and I'd be interested in your thoughts on blockchain's place and if it's something you guys are considering.
Thank you. Yes, indeed. For sure, we see there's a potential for blockchain and DLTs in the future of payment. Yes, there's a lot of uncertainty still, and it needs a lot of still exploration to be able to understand. So we see unique features like transparency, security, decentralization, which could revolutionize the payments in general. However, we still, from the central bank, we still see challenges in terms of the scalability. You see, in that area, we see a lot of limitation on the transaction throughput, constraints in the storage and bandwidth, especially on the growing ledger across decentralized networks. So that is one of the challenges. We still have issues on the regulatory concern around the new technologies. There's an issue on the interoperability. Here we are looking at the standardization of protocols, integration to legacy systems. The central bank, we are known to kind of embrace the legacy system. So we still see how are they going to be interoperable with the legacy system. And we still see the blockchain have different governance model and consensus mechanisms. So these are complex issues that all need to be addressed. From the central bank perspective, they need to be very clear, and before we involved into this technology deeper. But we can still see promising, especially when we see the private sector embracing, and we see it works wonders with the Uber transport. So it's a lot of potential, and we still have to explore those potentials. Thank you.
Yeah, thank you. Yeah, as you say, I think that it's probably not surprising in that there are a lot of areas still to be explored, and I guess necessarily the public sector has to slow play this somewhat to make sure everything is they're comfortable with everything. But yeah, Anthony, what's your perspective on this?
So I think, let's be honest, the sort of industry that we're all in is about risk mitigation. So things take time to change because you want to mitigate risk. These programs are multi-year programs, regardless. It's very different from just downloading a piece of software onto your phone and going, oh, we've done. It's a lot more than that. There's a complex web of requirements, from technology to governance to public policy as well. I kind of look at the technology. I'm a technologist at heart, but I look back at the history of evolution of technology, and Bitcoin and blockchain is 15 years old. It's still relatively young in the grand scheme of things from a technology perspective. I think the ones that you're starting to see lean in are the ones that can now start to see commercial opportunity with it. And this is why the private sector, I think, is leading the way a lot in that regard. But I look back to the technology we're using today in traditional finance systems is basically digitized versions of paper ledgers. You've got multiple copies. I think when you start to think about systems design and think about efficiencies, that's where I think a blockchain or a distributed ledger technology starts to become better, because you can all work off the same version of the truth. So if we think about every other market, not just payments, but other financial instruments and infrastructure, there's often copies of data flying around. This starts to reduce that. It creates more efficiency, lowers cost, actually creates more predictability and lowers people's risk because they're all working off the same document, essentially. And again, taking a very simplistic look back, I think the current payment systems are very much like email was. It was digitizing messages on faxes. Again, I'm showing my age a little bit here, but digitizing those and sending a letter. You got that, you had to wait for a response. Now you look at the technology now, it's interactive. I can see when somebody's typing. I can see when I can see how they're reacting to it. And I think that's kind of the technology that we're talking about now. Is that interactivity capability that it also brings that I think is a differentiator. And we just don't know yet how that's going to actually benefit infrastructure. I'm optimistic. I think this is actually changing the way we will think about financial services in its whole. And if we were designing systems today, this is probably how you design it, but you design within the constraints of what's available at the time.
Yeah. Yeah, anyone who's edited a report, as I've just done, knows the headaches of version control and everyone working from different copies. So yes, plenty of room for improvement there. Parwat, John, anything you wanted to add? Do you have any thoughts on blockchain implementation and I guess there's a difference in the private and public approaches?
I certainly think that blockchain is the way to go. It brings in lots of security, efficiencies. It's just the adaptability that has to go to take a natural course, but which can be faster. So I think that that's the technology you can use to move quicker. I mean, Anthony just put very nice about the email and the letters. So the email just made the letter more efficient. Same message, but quicker and faster. So I think the blockchain is really a very good technology that has been adopted. However, I think central banks must be cautious as well because they should not leave this so much into the private sector play. It's got to have some kind of framework to operate in. It's got some kind of regulatory alignment to it. So all those kind of things must be looked at, but certainly it is a way to go, and it's a future of payments, and it's a future of banking and financial services. Thank you.
Thank you, John. Anything to add there, Parwat?
Yeah, I agree with my other speakers. I think that, well, as central bankers, we have to be prudent in everything we do, right? But of course, we have to, on one side, we have to embrace innovations too, and this is one that we should benefit while taking care of other things, of having good governance, of ensuring that it would not be misused, and ensuring that users are protected. These are the things that we do care about as well. So
yeah, no, absolutely. We're kind of zooming back in on domestic use cases here, and I think that allows me to bring up another question from the audience here about the which I've now lost from an anonymous audience member. What are the typical costs, capex, opex, for implementing CBDC, and who would pay for it? We've talked a little bit about the amount of work that it can take to implement this, and I think I'd be interested if you feel, Anthony, that this is if the costs differ or who pays for it differs, whether you're using blockchain or whether you're using a more centralized infrastructure.
It is, and it's a little bit of a question of how long is a piece of string.
Yeah, I guess it's difficult to generalize across. Yeah.
If I look at it from a pure putting in the ledger, that's relatively low cost. It's designed to be run on essentially commodity hardware. Obviously, that scales, and you need to think about that. But running the actual ledger, it's all of the ancillary capability, sort of operational overheads, the monitoring, the management. That is all where the cost ultimately comes from, and the integration with the ledger. And so we typically start on our projects with a pilot where we'll do a proof of concept. We'll get our central banks into our sandbox. They can play in a really safe environment. They can try and break things and actually throw scenarios at the sandbox to see, does it actually do what I expect it to do? And then it's a question of then looking at what does that rollout look like? And again, most domestic payment systems have typically had some sort of commercial bank or participant engagement model where maybe there's a commercial requirement to participate. I think it's very early, just given where we are, but that's kind of the model I think we would probably see in the market. I say there's an opportunity for the central banks to potentially think about how the infrastructure is run rather than having to put it all in one place. I think a DLT or a blockchain gives that distribution, which also gives them potentially greater scale, lower cost to run this. It really does depend on the country, the problem you're trying to solve for, who the participants are, and also the appetite to sort of, I think, create foundations of innovation. I think all of the central banks that we're talking to are all looking to an eye to the future. They're looking at how do we set our economy up for the next 10, 20, 30 years. And so with that in mind, they're often working with the government as well to look at, okay, this is for the public good. This is creating new public infrastructure, new utility. We should think about it in those contexts, not just we're downloading a piece of software to do word processing. It's a lot more complex than that. And you're going to have different stakeholders throughout that. So conscious I don't give you an exact dollar value.
Sure. Yeah.
But they're the kind of considerations that we talk to. The first thing is to understand the size and shape of things, understand the problem you're trying to solve for, and then you can kind of work out what the operational model and the cost constraints might be.
Yeah. Talking about the problem that you're trying to solve for, that I think was, within the survey, financial inclusion was, unsurprisingly, the top of that list. But it's really only within emerging markets that's a focus for, which is unsurprising. And I think there's in developed markets there's a far less clear consensus on what exactly they're trying to solve. But looking at financial inclusion as a starting point, I wonder, coming to you here, John, do you have any thoughts on, I guess, what are CBDC can help with that? I think that's certainly something central banks believe, but it has to be quite carefully designed to make sure that it is going to deliver on that. And I was wondering if you have any thoughts on how to ensure that it is actually delivering an improvement in financial inclusion.
Yeah, thank you again. I think financial inclusion has been a topic that has been around for almost the last probably 20 years. We've talked about financial inclusion, we've defined it as probably having access to financial services and being included in the ecosystem of financial institutions and in all categories. Accessing credit, having ownership of accounts, accessing financial services, insurance services, and also having access to payment services. So this has been defined as financial inclusion. When you look at the developed world, in some of these, all these services have been available even in the absence of the CBDC. So the introduction of a CBDC is very good, but may not fall or may not come to enhance any of those, though it's a very good, secure method to do it. But that's why I think there's a bit of a gap in terms of the developed world vis-a-vis the emerging markets and the developing world. When it comes to the developing world, many of the people are not accessing these services. So a CBDC would be one of the things that can make sure that the digitalized currencies can ensure that they're actually within the ecosystem, and it will be easier to bring them into and offer all those services in one platform or in one bracket. So I think that's the development of the financial sectors in different economies, developed vis-a-vis emerging and developing, brings it out very clearly how financial inclusion is going to be enhanced by CBDCs. So the challenges are different and the playing fields are different. So that means the tools to be used are going to be different as well. Certainly for financial inclusion, it will benefit a lot from blockchain because that comes in security or cryptocurrency and stuff like that. So these are the different development challenges or levels of development in terms of infrastructure, in terms of technologies, in terms of the normal financial services, the traditional financial services is going to be very important. I'll give you an example in here is that look at the mobile penetration, mobile money services. They've been faster within the developing world, largely because the infrastructure to deliver these services wasn't there. So the mobile came in as something that is going to fast-tracked it and made sure that these economies leapfrogged. For instance, you need a lot of well laid out network to have ATMs everywhere, to have points of sale. So when mobile networks came in and they have networks all over the place, all over the countries, it was easy to ride on that to be able to offer the payment services on top of that. So these kind of things are going to be very important. Yes, to answer your question directly, CBDCs can have an impact on financial inclusion, but where the development of the nation is, or where the financial sector, how developed it is, how enhanced it is, how deep it is, will determine how it's going to be beneficial. The CBDCs are going to be beneficial to financial inclusion in every country. So it's not a one size fits all. It's going to be adopted differently.
Yeah, I think that's a really important point, and the exact what's needed to improve financial inclusion. I guess the bottleneck that's hindering the spread of financial inclusion is going to be different in different places. Lucy, anything to add on that point?
Yes, and just adding up from where John has ended, I think the perception that CBDC has a use case in financial inclusion, especially for the emerging market, is based on its inherent characteristics, where we see accessibility widely, whether it's online, offline, is possible with the design of the CBDC, adaptability that can easily be adaptable. We can talk of programmable digital currency, and it's also easily traceable because you can trace its transmission to the end, and it's also scalable. The fact that it can support APIs and third-party service providers as well. But however, we see that there's other factors that can affect its adaptation in the emerging market. We have to really consider more on the infrastructure in terms of the electrical power to the people that need access to financial services. You can talk of the internet availability, and also the most important is the rails for CBDC to be able to be accessed in remote areas. So those are the key fundamentals to make sure that even if the CBDC is designed as the useful case for financial inclusion, those are the key issue that has to be considered. In a country like Tanzania, where we see less than 30% of the populations have a bank account or they can access banking services. So you find the delivery channel for CBDC, it's a key fundamental for it to be a valid use case for financial inclusion. So most important, I think, is the dynamics in every market has to be taken on board when we design the use cases for CBDC. And it's not as John said, one size fits all, then you cannot adopt a use case which works in other markets to take it to the emerging market. So it's not going to work. So it's very important we look at the market dynamics when we design the CBDC. Thank you.
Thank you, Lucy. Yeah, I think, you touched on a lot of important features there. Remote areas is one that I think a lot of central banks have to consider a lot. I think offline payments is one of the things that comes up a lot here, and that was in our survey overwhelmingly selected as the most challenging aspect to deliver. But as Lucy was kind of saying there, one of the most important, if it's going to be a tool for financial inclusion, is that it can deliver. It can deliver on that. And in fact, we've just had an audience question come in asking about, that's a very challenging aspect. And is it possible to, they're also asking about the risks that introducing offline payments can bring, and how would they be mitigated? So I think that's a big and interesting topic. Parwa, do you want to start on that, or? Yeah.
Well, Just on the previous question too, I think that for us the big game changer in providing financial inclusion has been the establishment of the fast payment system for both the users and merchants, and with a proliferation of new players like non-banks. You have e-wallets, and these have catered to people who were previously unbanked, and for merchants, those who have not previously accepted credit card or debit cards because they couldn't afford machines, or they didn't want to pay the MDR fees. They now can just print the QR code and let people scan. So this has been addressed by our fast payment. And of course, one big challenge that we need to face is like if this mobile phone just stops working because of no batteries, or there's no Wi-Fi, what happens now? This is where offline payment comes into play, and not just through a conventional payment, or even through CBDCs using offline payment. This is something that we do take an interest in studying. Of course, challenges remain. You can have a very small amount in offline payments, like for mass transit. This is what has been used, and its risk has been mitigated by the cap on the transaction value, right? But of course, you can't put a cap on salaries or remittances too much, because it would lose its appeal. So this is something that we would need to address, and the broader issue of fraud in digital payments as well.
Yeah, a lot of big topics there, and it seems like there's a couple of different levels of offline payments, right? There's like ones where you have to be connected, well, online, you're connected to the internet, and then maybe you just need, telecoms connections, but can you do it, without power, without electricity? There's sort of differing levels of what constitutes offline payments, and I guess for a really, for really remote areas, you need a very high level of offline payments being delivered, but yeah, as you mentioned, we've heard from one or two central banks talking about capping the number of times a particular unit of digital currency can be exchanged offline before it's reconciled with the main ledger. But I can see there's a lot of complexity that comes in here. Anthony, can you shed any light on some of these challenges?
Absolutely, and we're comparing a new product to an existing product, i.e. physical cash. Physical cash is very good. It's very accessible. It promotes inclusion because it's very easy to use to a large extent. So I think one of the biggest drawbacks with cash, if we look at it from a pure offline perspective, I have to physically have it in my pocket to actually have access to it. So I have to consciously go and get it, which even in a scenario where we lose power is very difficult, because if the ATM loses power, I can't draw out cash. So there are some parallels with CBDC, and I think you touched on a couple of pieces of, we kind of look at it from how could you degrade the service, i.e. if I've not got an always on connection to maybe using SMS networks as a way of sending the transaction, to fully offline where nobody has any power, thinking about the user experience from that perspective. Now, there's a technology cost to do that. There's different risk factors. We assume in the Western world, everybody has a smartphone. That's not always the case in other countries. So we need to sort of have different form factors and different methods of doing this. And we've been experimenting with a number of partners around different models of inclusion that might maybe leverage, as an example, somebody else's phone that you can use, or somebody else's device that you can use if you don't have your own. You can go and sign up, you can go and get a wallet, but your wallet is actually kept in a store, in a secure storage facility, essentially on the internet, and you leverage the access to it through somebody else's device. So that could be really simplistic versus everybody has a smartphone. And I kind of, just going back to this is a big part of inclusion, but I kind of look at it from a, how do we avoid financial exclusion? And I even look at that in the domestic world. I can think of people in the UK as an example, who don't use mobile phones or smartphones for doing internet banking. They only do it on their computer because for some reason they think there's a difference. So some of this is about education as well. And what we also need to think about is, again, the level of knowledge or the level of expertise required to use physical cash is very low. I can go to another country and I could use their cash very easily.
Yeah.
It's this, you have to think about it in those contexts of how do you make this super accessible? And I think this kind of touches on one of the findings in the report about it being a failure, the project being a failure because they don't get traction or they don't get adoption. Central banks, you're building a product essentially here. Central banks, that's not what they do generally. They're about monetary stability and making sure the systems work correctly and they lower risk. The innovations largely come from the private sector.
Yeah.
So I think this is kind of where we see the opportunity to work together to help solve some of those problems. What we do is help build product and get people adopting those products. That's going to be fundamental to any of this change, making sure it's accessible regardless of whether there's connectivity, power, etc. But also making sure that it actually opens up a world of not just being able to make a payment, accessing financial services that you can't do today, whether it's insurance, whether it's credit, etc. That largely this has been the prevail of the Western world and the sort of developed world rather than the emerging markets because of the cost and the risk.
Yeah, absolutely. And I think that to the credit of central banks, one thing that did come out in the survey was that broadly, I think what you're talking about, a lot of it can be grouped under user experience, and that was the area in which central banks are already enlisting the most third-party help, or the highest proportion of central banks are enlisting help. We've got a few minutes left, so if there's any other questions from the audience, do send them in now, and we'll try and get to them before the end. But what was I going to ask about on the offline payments topic? Actually, there was another question that came in before on the cross-border front and regarding interoperability. And Anthony, something you mentioned earlier regarding real-time settlement, and a lot of the big wholesale systems are on a net basis, but with blockchain, you'd be moving to a real-time basis. And from a settlement risk perspective, that's obviously desirable, but there is the risk there. And somebody was talking about having to pre-fund payments, and that's kind of a trade-off there. So possibly we'll be able to come to a few of you on that. I imagine those of you in the regional payment systems have also been looking at that kind of trade-off as well. So yeah, I don't know who wants to jump in first there, but yeah, it's a big topic, I think. John, I'm going to pick on you. Any thoughts on that?
Well, get the context of what you would like me to touch on, just the context. Just give me back the context again.
So yeah, just the idea of real-time settlement, which mitigates the settlement risk, but you have to pre-fund payments, and that has a cost from a liquidity perspective.
That's quite a very interesting bit of it, because to introduce in payments, there are the two biggest risks: it's credit risk and settlement risk. So any system that comes out and tries to mitigate these two will be embraced by most financial institutions. So I believe that the more we use technological technology like CBDCs and blockchain, then somehow, and also adopting CBDCs that kind of bring in a commonality in terms of currencies. This can be eased, may not be fully solved, but can be mitigated, because it's increasingly difficult for even central banks to come and back these kind of settlements, to guarantee them. It becomes difficult because these are resources they're going to be using. So the pre-funding is always preferred, which is very expensive. Now, this brings me to the idea of a stable coin. And in relation to cross-border payments, which I'm dealing with today, I believe that if we introduce a stable coin, maybe in a certain region, which can be pegged or tied to a certain currency, this can be easier and can mitigate greatly the settlement risks. So we're a kind of a unit of account. So these are my thoughts around that. So this is why I think that the more innovation we go into technology, we can easily mitigate this kind of settlement risks along the way.
Yeah.
Because backing them up with either deposits or commodities, whatever it is going to become increasingly difficult. And this is where we've been, and the advance we are making today, we should be applying more technological solutions to these kind of problems.
Yeah, absolutely, and that's something we've talked a lot about in the report. There is some trade-offs there, some definite advantages, but some challenges that come with that as well.
Sure.
Lucy, any thoughts on this question of pre-funding versus accepting the settlement risk?
Yeah, from the central bank, we don't want to accept the settlement risk, and we would prefer more on the credit push transactions. So kind of pre-funding or having funds available, it's more an ideal before you make payments, but different models are evolving around it, whereby we can see there's a net off in terms of the payments, so that it requires less liquidity to do the settlement. And we really want to make sure that the environment, the rules of the games, rules of the criteria for participations, they are all covered, because you want to eliminate any form of a risk from the participating, from the chain where the transactions will be processing. So ideally, yes, we see a lot of potentials on the stablecoin, but still, as I said earlier, still all these new things, new technological innovations, whereby we really need more time to study. We need to come up with the clear regulatory requirements to nurture these innovations, and also to be able to incorporate in our payment systems, so as to make sure our core objective of maintaining financial stability and integrity is maintained at any time, so that even the central bank can also have a good sleep. So it's very, very important for us to be able to ensure that.
What we're all looking for, really, at the end of the day. Well, at the very end of the day. Harwa, anything to add on this question? I think we're over time now. So, any final thoughts, basically?
Yeah, on the pre-funding, it actually depends on the quantum, actually, right? I mean, for retail payments, this could be done, but then if it goes to B2B, then it's another issue altogether, right? So as to many questions, the answer would be it depends.
Yeah.
And, yeah.
Yeah. Anthony, final thoughts, and yeah, I mean that point is kind of relevant to the blockchain question. So perhaps that's good.
Yeah. So I think, again, comes out to the systems design. What are the constraints you're working on? If you go full real time, that increases the liquidity and the collateral required in the system. I think they need to be modeled to work out what the optimum is in terms of the amount of liquidity required versus the speed and of trade. Work those through. I think that's the kind of fundamental. It's designing the system in a way that actually is super efficient.
Yeah.
Again, I take a step back. We look at what things like the manufacturing industry did with just-in-time ordering and delivery. I think there's opportunities here within the financial infrastructure to try and optimize some of that, so you don't have to pre-fund and buy your stock all at once. You can do it as you need it, and I think that's kind of one of the innovations that could come through a lot of this work.
Yeah, absolutely, and I think just the ability to have it on demand, have the flexibility to make that choice is something that is very worth having, and yeah, requires these kind of new technological advances. Sadly, we're going to have to leave it there. We've run over time, but thank you very much to my panelists. You've all been fantastic, very insightful. To the audience, thank you for listening, and do download the report. I think there's a QR code on your screen. You can find it on the website as well. And yeah, keep an eye on our website for details of upcoming events and more reports. This is a topic that's not going anywhere for us. We'll be talking about it for many years to come. If the survey is anything to go by, there'll still be central banks putting these out in 10+ years. So we'll see.